Welcome to the Money Smart for Adults, Module 13, Buying a Home. We're going to go through this instructor guide and see exactly how you can facilitate this training. As normal, as in all other modules, it starts out here with a contents page giving you all the information relating to this particular module, the page number sections, so that you know exactly where to find things here. Background information for instructors, as with other modules, is exactly the same. You have the instructor guide, which is what we're looking at, the participant guide, and by the way, if it's a challenge for you to give copies of participant guides to everyone in your training, please refer them to the online version or some other solutions that may be appropriate. And then we have the PowerPoint slides for you to use during the training. As normal, we have the training preparation checklist, so make sure you go through that, making sure that you have everything that's going to set you up to have a successful training. Materials that you may need, make sure that you're going through this list as well as in other modules, making sure that you have all the supplies that you're going to need to deliver the training, including optional materials such as a parking lot for questions, and then supplies for any optional introductory activity that you may be doing. The icons here for this module is exactly the same as the icons for all the other modules in the Money Smart for Adults training. So you can go here again to take a look at these for a refresher if you need to. The purpose of Module 13, Buying a Home, is to identify the steps in the home buying process, explain how to know if you're ready to buy a home, identify ways to estimate how much you can afford, describe home financing, explain how to get pre-qualified or pre-approved for a mortgage, discuss how to compare loan estimates, explain the roles of professionals, describe the processes of making an offer, negotiating with the seller, and closing the purchase, and identifying where to get help if you're having trouble making mortgage payments. Here is the module at a glance table. We estimate you're going to need about 2 hours and 45 minutes to cover the entire module, not including breaks or any optional introductory activities. Now, I got to say this. When you practice doing this training, you may find that you can do it maybe a little faster than the 2 hours and 45 minutes, or depending upon your training style, it may take you a little bit longer. That's going to help you to be more accurate in determining the length of time that your actual training is going to be. I want to refer you to the Guide to Presenting Money Smart for Adults, which is going to include additional information on selecting sections for specific audiences so you can really tailor this training. Now, because we're talking about buying a home, your participants might be still deciding if they should rent or buy themselves, and so you may want to recommend the training on Module 12, Making Housing Decisions First. This Module 13 begins with the assumption that participants are seriously considering buying a home. However, this module does not replace a homebuyer education course or one-on-one assistance from a housing counseling agency approved by the Department of Housing and Urban Development. So just wanted to make mention of that. Please make sure your participants know that any homebuyer education requirements that they have from their lender will still need to be met during taking those other types of classes. Now, as we get into this module at a glance table, you can see here we have the sections, the key takeaways, the purpose objectives, and the time estimates all laid out here for you. Now, what's great about this is, again, if you're time constrained, you can look at this and determine exactly what is going to be relevant for your particular audience and what's going to be best to present them with the time that you have allotted. So here's a tip. Again, you want to make sure that you practice these sections, practice going through this so that you can really nail down the timing so that you can really get this time allotment down so you know exactly how long your training is going to be. Now, let's get into the module opening. Of course, you're going to welcome participants as they arrive. You're going to introduce yourself, ask them to sign in, all of the normal admin stuff that you have to do for every single module. Then you're going to administer the pre-training survey. Now we're getting into these things, these other additional things that you want to kind of just set up the atmosphere for your training, the parking lot, let them know that you've got that created for questions or things that can sit there until a more appropriate time to actually address them. Then, of course, your optional introductory activity. If you have the time, I highly recommend that you do one of these simply because it's going to create rapport and really break the ice in the room so that people are really energized and really ready to tackle the topic. So here we go. We are now into section 1, getting ready to own your home. The objectives here is to list major steps to buying a home, determine how much house they can afford, calculate a debt to income ratio. As with other modules, you're going to start out with the key takeaway as part of the introduction to the section. Notice the key takeaway is denoted by a star. So that's really the marker. Every time they see a marker, they're going to see this key takeaway. Now present information, reasons for buying a home. This discussion really is a great discussion to start out your training simply because it's going to get them engaged on the topic of owning a home. Now, you might need to limit the length of time this discussion takes because it could totally consume a real big part of your training if you let it go. So just wanted to let you know, be aware of that and really make sure that you can start this discussion. But again, don't let it take on a life of its own and dominate your time because you've got lots to cover. And so as we get into slide number 5, you're asking a question about reasons why people might want to buy. So as you would, other questions you would ask, you're going to capture what they're saying on the board. You're also going to be contributing any information there that would help with the discussion so that we really have a robust list based on the answers coming from the floor. Then steps to buying a home. Now we're going to talk about these 5 steps. So the next few slides are outlining the 5 steps of buying a home. Step 1 being getting ready. Step 2, figuring out the financing. Step 3, shopping for your home. Step 4, buy your home. Step 5, maintain your home. So these next 2 slides are really giving bullet points about that. Now I want to say this, that as a note, please keep this in mind. Checking their credit history is an important part of getting ready to buy. So consider incorporating portions of Module 6, Credit Reports and Scores, into your training, especially the applied activities on getting and reviewing credit reports. Very, very critical as part of the process. And as we go through our discussion today regarding Module 13, when we talk about debt to income ratios, you'll see how actually the credit conversation will come in because credit actually will reveal the debt that they have that will be counted into debt to income ratio calculations. So going forward, we have an opening activity to try it, getting ready to buy. This is a really good scenario here because there are many factors that go into deciding whether a person's ready to buy. So you want to get your participants ready for this discussion. We have the scenario of Hayden, and Hayden is looking at trying to decide if it's time to buy a home for his family. So you're going to give them an opportunity to read through this and to get into the questions here in regards to, is Hayden ready to buy? And so your participants are going to be going through this checklist. They're going to be answering yes, no, or I don't know. And then after a while, what you want to do is you want to actually ask the participants, what do they think about Hayden and his readiness to buy? Some participants are going to say, yes, he is ready, and they're going to give you reasons why they think, and you're going to contribute more information to enhance the discussion. There are going to be other participants that may say, no, they don't think Hayden's ready to go, and so you're going to hear those out, and you're going to write those down as well. And there are going to be participants that's going to say, I don't know, don't have enough information, can't determine, and so you allow them the opportunity to share their answers, and you will also contribute additional information and bullet points to enhance that discussion. So you want to get every voice in the room participating in that discussion using Hayden's information, that scenario, that story that we went over for this particular activity. Because now, after that's done, we go immediately, you're going to present the applied activity for this. Am I ready to buy? And this is really about having them to take a look at their own scenario, their own situation. Now, you can do this after the training. You can tell them they can do it after the training, but I'm going to suggest if you can do this in your training, if time permits, it's possible that if you can have this discussion here, it's really going to continue to help create context and really drive home the thought process around this big decision for people. And so you want them to be able to do that. And then, of course, have your discussion points and have others in the room contribute to the discussion so that we can really have very good conversations around this topic. Now, we're going to present information and lead a facilitated discussion on how much can you afford. So the next few slides is getting into this question. And the point of emphasis is that every person has to decide that for themselves. Now, of course, there are rules of thumbs out there to determine different things and different scenarios, but what we want to do here in this training, we're having our participants actually think about the question and then really consider if this is really a good decision for them. Now, there are multiple ways that you can think about helping people to estimate whether or not they can afford. There's a spending and savings plan method or the debt to income ratio method. You're going to walk them through those here. And so the next few slides goes into this more specifically. Now, slide 14 gets into the monthly mortgage payments, the PITI, principal, interest, taxes, and insurance. So you're explaining to your participants that that makes up the housing payment. Then also you're looking at the fact that there are other costs that they're going to incur. There are one-time costs, and then there are ongoing costs of home ownership that must be considered. So you're going to ask that question about examples of ongoing costs, and you're going to write those answers down. You're going to ask people to contribute what are some of those things, those costs, and then you're going to have that discussion. And notice the bullet points here, things like homeowner or property association dues, home maintenance, yard or property maintenance, all these things that could totally add to the cost of owning a home. Now, conclude by noting that prospective home buyers should estimate the full cost of owning a home, not just the monthly mortgage payments, when determining what's affordable. Now, this apply activity, what can I afford? It's on slide 16 for you, and it's page 10 in their participant guide. And this is really an exercise to help your participants figure out what is affordable for them. Again, not that we're relying upon general rules of thumbs about what's affordable. We are actually getting down to the numbers to find out if the participants have the money, the capacity to actually make this happen. Now, here's a note. Time permitting, consider reviewing the apply with participants using a copy from the participant guide. Okay, so you're going to get your own copy and consider going through this with them if the time permits. Now, also, I'm going to refer to you to Module 12. There is a try it activity, estimating affordability in terms of making housing decisions. Again, that's Module 12. If that's going to help facilitate the discussion, I would certainly bring that into the conversation at this point. Now, present information and lead facilitate discussion about debt to income ratio. What we're doing here is we are defining what debt to income ratio means, what it is, how to calculate it. And you're going to show them that it is based on a percentage of their gross monthly income using debt payments. Now, what this means is that if we have a debt to income ratio of 40%, that means 60% of their gross income is available to cover everything else. So you want to explain that lenders are looking to have their own debt to income ratio guidelines depending upon the loan program that they're applying for. Some loan programs have 36% maximum debt to income ratio. Others, it could be up to 43%. It just depends on the lender and the program. But what's important is that participants know how to calculate their particular debt to income ratio to help them to make the decision around affordability. Now, in terms of this whole process, there are other expenses besides debt that also has to be taken into consideration. So you're going to have some discussion around that. We're talking about food, household supplies, water, sewage, cell phones, car insurance, school expenses, all these other things that are there that could also impact the question of affordability. Now, the higher the debt to income ratio, the less money they're going to have to cover everything else. Okay. And so those other expenses that I just listed, you're going to emphasize to your participants that this is all part of the calculation so that they can really make a determination whether or not if this is something that's doable. So the activity, try it, calculating a debt to income ratio. This is really awesome because it gives them an example here that they can see, they can do the calculation and come up with the debt to income ratio. And I got to say this, notice that the example in the triad activity at the bottom here, it says 54.5%. That's the actual answer here. And no, that's not pretty. No, it's high, right? And so we want to make sure that we talk about that. What does this mean? Really, really ask your participants about the meaning of a high debt to income ratio. Now, of course, in this example, 54.5%, more than half of the income is covering the debt. Now, there are some options that your participants are going to have to consider going forward. Either they may want to look at lowering housing costs or figuring out how to reduce or even eliminate their other debt. Because many lenders would not loan money to someone with a debt to income ratio this high. And that is the point of this exercise here, is to get them to see that if in fact, if their own personal debt to income ratios are over the threshold, then there is some decisions that need to be made in terms of how to move forward. And so the question to ask is, can this person afford the house? And you're going to get various answers based on people's opinions on this, but we really need to talk about how the person can lower their debt to income ratios. So you're going to write the responses up on the flip chart or the whiteboard and have the discussion, because this is going to lead into the apply it activity, my debt to income ratio. Now you can tell them to use this activity after the training because it's going to require that they get all of their information. I mean, everything, all of their income statements, their pay stubs. You want them also to get their monthly bills, their loan statements, credit card statements, or any other records that's going to help them to accurately determine what their debt payments are, because we want to get an accurate debt to income ratio number. So encourage them to take the time to get all of their information so that they can do that activity and get the right number. So as we close this particular section, where we see the actual key takeaway, buying a home is a process. Start by making sure you're ready to buy and figure out what you can afford. Going into section 2, financing a home purchase. Objectives here is to identify the types of loans, define loan terms and concepts, describe how mortgages work, and to shop around for a mortgage. Obviously, we're going to start out again with our key takeaway. So go ahead and specify what that is. But again, denote the big star, and that gives them the idea that this is something that's important. This is the main thrust of this particular section. And then we're going to go forward. Now we're going to talk about the types of loans. You're presenting information around the different types of loans that they may get based on the type of property that they're going to be purchasing. Now, most people are going to need financing. This financing is called a mortgage. And it's often the largest amount of money people will ever borrow. And there are all kinds of different mortgages that are there. And so what we want to do is make sure that we give them an opportunity to learn about mortgages. And this is your opportunity to do that. Now, a mortgage, again, is a loan to buy a house, a condominium, a townhouse. And so what we do here is, you see on this particular slide, slide 26, it's talking about the components of a mortgage, the mortgage itself, the principal amount of the loan, the cost of the loan, and the APR, the annual percentage rate. These are all elements that you're going to help your participants understand as you're going through this. Now, we also have to talk about the down payment, because the down payment is regularly factored into the mortgage, because you figure the price of the home minus the down payment, then what's left is what the mortgage is going to be. So the example here is, if we have a $160,000 purchase, a person puts $8,000 down, their mortgage is going to be $152,000. So the down payment obviously is going to play a factor into the mortgage itself. Now also, Depending upon the loan type, the participants may need to have private mortgage insurance. And so you're going to have a discussion about this. Now, when a down payment is less than 20% of the purchase price, lenders may require that they purchase private mortgage insurance. In addition to that, there are some characteristics that you're going to talk about: loan amount, the type of interest rate, the loan term, and any upfront costs that they may play at closing. So you're helping people to understand that these are all components of the mortgage. Slide 30 gets into common ways to pay for taxes and insurance. That's a part of it. Now, some lenders are going to require that they have their taxes and insurance as part of the monthly payments. There are other lenders who allow them to pay them themselves. Okay, they can pay it on their own. But you want to let your participants know that taxes and insurance are part of the transaction, and they have to determine how they're going to be paid. Now, we said that there are different types of mortgage loans. There are fixed rate mortgage loans and adjustable rates. So the next few slides are going to get into just that, identifying fixed rate mortgages and how they work in terms of staying fixed over the life of the loan. Then there's the adjustable rate mortgages, where those may adjust based on different terms. The example here is a 3-1 arm and a 3-2 arm, where the first number represents the number of years that the loan stays fixed. The second number gives the cycle or the frequency in which the adjustment is going to happen. So on a 3-1 arm, it's fixed for 3 years, and then after that, it will adjust every year based on whatever the index that the adjustable rate mortgage is tied to. Same with a 3-2 arm, fixed for 3 years, and then every 2 years after that, it's going to adjust based on the index and that sort of thing. So I just want you to understand, emphasize these differences, because sometimes lenders will offer these different types of opportunities for people to take different types of loans, which may obviously change affordability, change how the payments are structured, and this information here is going to be critical to help people understand that process. Also, the Consumer Financial Protection Bureau has a consumer handbook on adjustable rate mortgages that your participants can review. I would just strongly recommend that you give them the website, consumerfinance.gov, and to get that document so that they can see and learn more information about adjustable rate mortgages. And so another thing you might want to do as a tip to kind of enhance the atmosphere and enhance the discussion, ask your participants to share their experiences on fixed and adjustable rate mortgages. Just kind of get a feel for what they think about them, what they've heard about them, and what they've experienced about them over the years. And that will certainly add to the discussion. There's also rate lock and balloon payment. So you're going to explain what rate locks are and the different periods of rate locks. You're going to explain balloon payments and how that works. After a certain term, then the entire balance is due and payable, and when that might be appropriate for people to choose. So you're going to look at that. And again, these are different elements of the financing packages, and you want to make sure that your participants understand that. Now, we've been talking about different kinds of mortgages, and mortgages either come in conventional or government guaranteed, which is sometimes called government insured. So the next few slides are going to get into what that means, starting out with conventional mortgages. And of course, the requirements for a conventional mortgage is really what is going to differentiate it from some of the other mortgage types. So generally, credit history that's considered good, regular income, and a debt-to-income ratio within the lender's acceptable limits, which is typically around 36%. Down payment, which may range from 3 to 20% or more, depending upon the lender and the loan program. But there are some people that may want to buy in a high-cost area, and that's where the term jumbo loan is applied. Jumbo loan is what it's called. It's a jumbo loan. It's a large loan that allows people to buy in high-cost areas such as San Francisco, Boston, New York, Seattle, some of these other areas that really have more expensive homes. You may also hear the term second mortgage, and you want to explain to people that a second mortgage is another lien that's part of the financing package, and some people get second mortgages as part of their purchase process, and that's okay. We just want to make sure that people understand that these do exist, and it's normal for people to consider that as part of the process. Now, getting into government loans, there is the FHA loans, USDA, Veterans Administration, and HUD loans. These loans are spelled out here, and you're going to explain to your participants exactly what they are, their characteristics, and how they can actually get an application for them. Now, I want to say this, that these loans do have different credit and down payment requirements. So this is a major factor that may play into a participant's decision-making process on actually choosing what mortgage is going to be most appropriate for them. In addition to that, there are other assistance programs that are available. So in terms of the affordability factor, there may be opportunities in a particular area where there's down payment assistance or closing cost assistance programs that can be used with the FHA, VA, or USDA loans, and first-time homebuyer programs that offer down payment assistance or other forms of assistance to people buying a home for the first time. So these programs do exist and they are available. So you're going to make mention of that so that your participants understand that if they don't have a large down payment saved up and they're wondering what's going to be possible for them, having access to one or more of those down payment and or closing cost assistance programs may make the difference to help them to move forward. The apply activity for this particular section, my mortgage options, and it's giving a person the opportunity to really think about themselves. There are some questions that they can ask themselves to really think through whether or not, they're going to determine which mortgage is going to be most appropriate for them. And here is an example of what they're actually looking at in their participant guide. It says, what kind of housing do you plan to buy? Check the box that corresponds with your answer. So they're going to be answering those 4 questions, marking yes, no, or I don't know. And you may have opportunity in your training to allow them to discuss this in a group session. Or if it's not enough time to do this, then you would have them to do this on their own. That's totally up to you based on what your timing is in the training. The next portion of this is getting into how mortgages work in terms of the amount of the loan, interest rate, the kind of interest rate, and the terms of the loan. Some people are going to want a 15-year loan, others are going to want a 30-year loan. So these next few slides goes into that discussion, and you're going to help people to understand what that's all about, because that lends itself to amortization, which is here on slide 43, where you're talking about the amortization. This is actually the schedule that shows every payment from the first payment through the last payment and how the payments are applied to interest, how the payments are applied to principal, and they can see exactly what their loan balance is at any step in the process. Now, here's what's interesting. Our next activity gives an opportunity for the participants to actually go through an example of reading an amortization schedule so that they can calculate equity and determine, how they can, actually increase their net worth by simply paying down their mortgage. And so how to calculate that is really made obvious here in this particular activity. And so we have a scenario with Lucia. And Lucia is ready to buy. She has $10,000. And you're going to have your participants go through and read through this scenario. And then there are a series of questions that helps them to identify reading this amortization schedule. And then at the end, calculating equity. And what's great about this is that at the end of this exercise, you're going to be able to see exactly how much equity is in the property. And that's going to be a very, very good conversation to have, because a lot of people want to know, how much their homes are going to be worth in terms of equity as they pay down their mortgage. Now, again, just a note here, that equity position is going to be determined by market value. So a person is going to have to get an appraisal in order to help complete the calculation, but at least the amortization table gives the information on what the loan balance is at any step or any month in the process of the loan. So that's a really great exercise. Now you're going to now present information on getting pre-qualified or pre-approved. So the discussion is around the pre-qualification, which is an informal process that just really gives a quick estimate of how much money a person can borrow. But then there's a pre-approval where that's an actual commitment from the lender. And as a matter of fact, pre-approvals are what's necessary if a person is starting to go shopping for a home. Usually the real estate professional is going to ask for a pre-approval. The pre-approval is going to require a little bit more information, such as pay stubs, W-2s, tax returns, bank statements, and any other additional information that the lender requires to show that the person has the ability to actually get the mortgage or pay the mortgage. And so that's why a pre-approval is going to require this additional information, because the lender is going to make a loan commitment. Now, if participants are interested in learning more about that and what lenders look for when deciding to loan money, consider including portions of Module 7, Borrowing Basics, in your training. Now, we're going to be talking about presenting information around shopping for a mortgage. So now we want to make sure participants understand that this process is not just calling someone up and saying, hey, what do you offer? It's about getting a loan estimate. Now, here's a tip. You may want to get a sample of a loan estimate from the Consumer Financial Protection Bureau's website, consumerfinance.gov. You can do a search on Loan Estimate Explainer. You can print that down and provide that to your participants as a way to show them an example of what one looks like. But this is really going to be important. And so what we're saying here in this particular section is making sure that people understand getting loan estimates from different lenders is going to be the way to compare one loan to the next. Now, some real estate professionals are going to make recommendations for a particular lender. The suggestion is that a participant should actually get at least 2 additional loan estimates from different lenders so that they have a wide variety of options to choose from and to compare. The apply activity for this is my worksheet to compare loan estimates. So as participants are gathering actual loan estimates from lenders that they're choosing to work with or considering to work with, then they can actually write out on this comparison sheet so that they can see exactly what each is doing. And this is a very, very awesome tool to do because they are able to look at this and to analyze it and then make a decision. And so now as we move towards our section closing, again, we are reiterating it with the key takeaway once again. Now, the final section here in this particular module is section 3, getting help and buying your home. The objectives here is to identify the types of professionals that can help with finding and buying a home and their roles, explain the process of making an offer on a home, and closing, list ways to get help when struggling to make mortgage payments. So we start out with our introduction, which includes the key takeaway here, and we get that again denoted by the star, and then we go into a discussion around putting together your team and finding a home. So we really want to introduce the whole process of a real estate agent and how a real estate agent may be a help in the process. But there are other professionals in the process as well. And so the next slide, slide 51, goes into asking them about who else might play a role in helping them buy a home. And so there are a number of different professionals as listed here. And so you want to make sure that you make everyone aware of the different professionals in the process. Now, our activity for this particular section, apply it, my home buying team. And so this is on page 30 in the participant guide, and it really walks them through thinking about people, professionals that they want to include on their particular home buying team. Now, if you wish to review this with participants, use a copy from the participant guide because an actual print of that is not included in your instructor guide. Now, present information on making an offer. Now it's really about getting in there doing this negotiations. So we make an offer and it can be totally exciting for people, but it's also a little complicated because there are many facets to that. So you're introducing the concept of making an offer and what's involved in making an offer. So the next few slides goes into that and looking at what else is in an offer, things like the walkthrough clause, the date the offer expires, contingencies, and all those kinds of things. And then once an offer is made, okay, then what happens next? The seller can either accept the offer as is, the seller can actually reject it and make a counter offer, or the seller can make a rejection and don't make any counter offers. And so those are the choices that might result in the offer that is presented. And so you want to make sure that your participants understand those particular scenarios. Now, the other part of this is very important. This is the home inspection. There's a lot of talk around home inspections, especially in markets where there are multiple home buyers competing on the same properties. There are some requirements that some lenders are going to require a home inspection, period. So that might be the case. If a lender says we need a home inspection, then they have to do it. But here's the thing. There are some cases where there might be some real estate professionals that may ask your participants to waive a home buyer inspection as part of the process. And that is a decision that people are going to have to make. In terms of, is that a good decision? That's going to depend. That's going to depend upon all the factors and information and facts around the scenario. So you may want to have a discussion with your participants about whether or not waiving a home inspection might be appropriate for them if their real estate professional requests them to do so. Then you're going to present information on closing on a home. Now we're looking at the final part of the process where now we're going to the closing, where the loan becomes final, the funds are distributed, and things are all wrapped up. Now, before that happens, there are some documents at closing, and so on slide 59, you're going to be showing them the documents that they can expect to get at closing. Now, they're going to be able to get some of these documents 3 days in advance as part of the new regulation so that they can review those things and determine to make sure things are right. Now, I want to say that in this particular transaction, a purchase transaction, there is not a notice of the right to rescind. So you want to emphasize this. And so we want to make sure that they understand that once they finalize a closing on a purchase, that's it. There is no rescission. Then finally, presenting information on getting help when they're in trouble. This is really about helping them to understand where they can go to reach out in case they are having some challenges with making their mortgage payments. And so there are options that you're going to share with them about contacting the lender, contacting the home preservation line, contacting a HUD-approved housing counseling agency, or their state housing finance agency. The actual activity, apply it for this particular topic, my resources for getting help paying my mortgage. And this is really giving them an opportunity to really take an inventory of these types of resources in the event that something happens later or it looks like they might have trouble, they can have something to refer to immediately. Now, in terms of the section closing, you're gonna be giving this final takeaway. Okay, get help with the home buying process, interview before you hire help, ask for references, understand what services you'll receive and how much they will cost. Really emphasize that it's very important that they understand that they have complete control in this process all the way up through closing. So now as we wrap up this review of Module 13's Instructor Guide, you want to remember the three key takeaways that we went over, and those are notated here. And then you really want to emphasize the take action portion. Now, I want to say every module has the same take action activity, and it's important not to skip it. Even if you only can spare a few moments, you don't want to let them go without doing this, because the participants will remember what you just presented a lot easier if they can write down a few action steps. Knowledge is not enough. Action is required. So I'm going to suggest that you do what you can to make sure you emphasize the take action portion of the training. And so then as you wrap up, of course, you can introduce the post-training survey. Go ahead and give them that. Let them complete that again, just like we did with the pre-training. We said we should have loose copies. You want to have loose copies of these as well, and to give them time to do that. And of course, you have the answer guide of that, so you can check against what they're answering, and then of course you can compare them from the pre and the post if you chose to do that. And so now what we want to do here is just make sure that we do what we have to do to wrap up all the things that is going to give us a great closing of this particular module. And then here we're looking at where Module 13 fits into the greater curriculum. And so there it is. That's our overview of Module 13, Buying a Home. Thank you.